Hi, this is Sean McMillan, mortgage broker and banker with the Wu McMillan Group here at First Financial, doing business in the prime time part of the west side of Los Angeles. In answer to the questions that have inundated us the most over the past week, can I get a lower interest rate? Is this a good time to refinance based on the recent Fed action? We'll do our very best to make sure you're well informed. While it's true the Federal Reserve did in fact lower both the federal funds rate and the federal discount rate by a full 0.5%, the fact remains it didn't directly translate into long mortgage-backed securities, which is where we're having the liquidity crunch crisis. The fact of the matter remains that until unhealthy loans, unhealthy risks, and unhealthy practices completely cycle out, we're going to be standing on some shaky ground. There will be more foreclosures, more layoffs, and potentially, frankly, for those doing a lot of homework, a lot more opportunity. In answer to, is this a good time to refinance? Well, the question really can be best answered by clearly identifying what your goals and objectives are. If in fact you'd like the security of a long-term loan, a 30-year fixed, or even a 10-year interest-only type of product, odds are good that the product you now enjoy is in fact largely more competitive and probably a lot better than what the current market conditions could provide. If in fact you are in a short-term loan, a monthly adjustable with negative amortization, or an interest-only note for 3 or 5 years, then it's definitely a good time for a discussion. See, what the Fed action really did is it affected a lot of consumer debt, credit cards, car payments, student loans, home equity lines, things of that nature. But it didn't solve the crises, the issue that the lenders and investors are feeling, which is the fact that there isn't anyone who wants to buy their mortgage-backed security paper. And with little or no buyers on the open market, banks are forced to make those loans themselves and portfolio them or hold them within their own investment pools. Until such time has passed, we're going to be dealing with kind of a shaky ground. It may be that the federal government may be able to address it and alter the conforming loan limit and try to increase that to stimulate business, but I think there's a lot more to be cycled out. So our best advice is to contact us for a consultation. Take stock of where you're now at. If you have questions, fears, doubts, etc., come in, sit down, be our friend, our trusted client, someone that we greatly care about. And in fact, if you know anyone who's going through any kind of questioning of their position, has doubts, or wants a second opinion of what's taking place, please refer them to friends like us, people you've come to trust and care about, so that in fact we can take care of those people to the same level of service that you're used to receiving from us. And until then, if you have any other questions, please feel free to call, email, write, stop on in. To your continued success. Thank you.